The community property problem from February of 1996 is a classic community property question. This is a typical run-of-the-mill question presenting typical run-of-the-mill issues in a standard fashion. And it also allows us to have a look and see an example of a call of the question that allows us to anticipate the issues pretty succinctly. Have a look at the four-part call of the question. 1. Is Wilma entitled to compensation for her contributions to her husband's education? Discuss. Well, we know what the law is, and if you're studying this seminar to learn the law, the key piece of law you will learn here is it depends on how long the community has been compensated for the education. There is a rule that we know as the 10-year rule. We'll look at the facts, we will count, and we'll reach a result. 2. Is Wilma entitled to any portion of the funds in the joint account? Discuss. Well, here again, we can anticipate the issue, which would be tracing. If the wife is claiming some portion of funds in any account, joint or otherwise, the question becomes, can we figure out which dollars belong to the claimant? If the answer is a positive integer, we award the claimant that amount. 3. What rights, if any, does Wilma have arising out of the sale of the 1-acre parcel sold to Paul? Well, here we ask, what defendant might she be seeking a remedy from? Her husband, or her ex-husband, or Paul? And the answer is maybe both. And this looks like a crossover to the law of real property. And the last call of the question, what rights, if any, does Wilma have arising out of Hank's payment of his gambling debt? Discuss. Well, a quick reaction to this call of the question, other than to smile at the example of human nature on display, is it depends on what money he used to pay his gambling debt and when he paid it. So we'll have a look at the facts. But essentially, we've got a four-part call of the question. It reduces a 1-hour essay into 4 15-minute short answer problems. We already know the basic structure of our analysis, source, actions, presumptions, and we'll come up with a straight answer to the questions presented. So now, let's have a look at the fact pattern, and we'll see here, as elsewhere, exactly how straightforward and simple these problems really are. Take a look at the first paragraph of the fact pattern. We find out about this marriage, a California marriage in June of 1981. That eliminates all quasi-community property issues in one stroke. In the fall of '81, Hank enters law school, so his education is exactly coterminous with the marriage. He does not begin his education before his marriage. He is married first, then he goes to law school. He graduates from law school and is admitted to the bar in 1984. Coincidentally, the same year I was. Wilma was the sole provider for the family, working as a school teacher and contributing all of her earnings to support Hank and herself. Well, all of her earnings during marriage are community property. These earnings aggregated $80,000, about half of which went to pay Hank's law school expenses. So we already have a pretty clear answer to the first call of the question. This is a fact pattern arising from February of 1996, and it deals with a marriage that began in 1981 and a law school education that ended in 1984. If this marriage is dissolving in 1996, more than 10 years have elapsed. And so the answer to question 1 is 0, unless the interests of justice dictate otherwise. Paragraph 2. After his admission to the bar, Hank opens his own law practice, and Wilma left the workforce to become a full-time homemaker. Each month, Hank deposited his net earnings from his practice in a bank account, which stood in the name of Hank and William as joint tenants. Wilma has made no deposit in this account. The couple paid all their living expenses from this account. Well, we know about the joint account from call of the question 2, and it's likely there will be more facts. But based on the facts that we have up through paragraph 2, we can say that Wilma is entitled to half of the money in the account, because every dime that the husband earned in his practice is a community property dime. And Hank and Wilma are entitled to 5 cents each out of that dime at the time of dissolution. Paragraph 3. In 1991, Hank bought a 1-acre parcel of undeveloped land as an investment for $25,000, which he withdrew from the joint bank account. He took record title to the parcel in his name alone. Well, that's not going to do him a whole lot of good. If he bought this parcel during marriage with community property funds, it doesn't matter what form of title he takes it in. We will look to the source of the money, and we will give that source of quality to the property purchased. The money was community money. This parcel looks like a community parcel, regardless of how Hank took title. In the next paragraph, we see the inevitable commingling issue. Hank's mother leaves him $500,000 in '92. He deposits it in the joint bank account. Well, what does that mean? Does it mean that he's made a gift to the community? Almost certainly not. Will it be possible to trace the relative assets? Probably yes. Next, we see in the following paragraph, paragraph 5, the separation. In November of '95, they separate. Hank sells the 1-acre parcel to Paul for its fair market value, which was then $50,000. Hank represented to Paul that he had never been married. So it looks a little bit as if Paul is going to turn out to be a BFP, although that may not help him here. He delivers a deed to Paul, which only Hank signed. Paul recorded the deed. Hank used the proceeds of the sale to pay off a recent gambling debt that he incurred in December of 1995. So we see by looking at the dates that this gambling debt arose after the separation, and thus it is not going to be a community obligation. Next, we learn about the suit by Wilma in January '96 to dissolve the marriage and to obtain a settlement of property. The current balance in the joint account, $750,000. And then we get the call of the question again. So, as I said up front, this is a straightforward community property problem, and it is a very typical fact pattern. We will see many more like this before we're done together, especially if you study questions beyond the questions that I provide in this seminar. These are issues that come up over and over again. So, look at my outline of issues, and here you'll see I do exactly what I say we ought to do. I don't waste a lot of time going into excessive detail, but I still find a way to flesh out the basic approach to community property. So, for each item of property, I discuss the source, the actions, and I state a quick conclusion. And you'll see, in particular, with regard to item 3, the 1-acre parcel, here I actually put a fair amount of facts into the headings. And as you look carefully, you'll see all of these headings are a little more elaborate than the typical headings that you'll see throughout my other work. But I think you'll see, as you look at the answer, that these elaborate headings serve a good purpose to summarize the content well. It seems to me, given the relative simplicity of community property, it is important to have particularly well-organized and predictable and insightful answers. You don't want to do anything too unconventional here, and you also don't want to waste a lot of time with boilerplate, because as we'll see as we look at the answer, some of the analysis here actually is a little complicated. And if you put a lot of time and energy into boilerplate, you may not have time to do the real substantive analysis that can get you a clearly passing score on a fact pattern. So, briefly, let's have a look at my answer. Take a look at the very first thing I write up front before getting to the first item of property that we're analyzing. Notice that what I do in these 3 short sentences covers all of the ground that the Barbry boilerplate does, but it does so only in 3 sentences, a quick upfront paragraph to set the stage, not unlike many of the quick upfront paragraphs that I use throughout our work together. Remember, I think the facts are more important than the law, as the examiners think the facts are more important than the law. So I strip the definitions and I strip the boilerplate. I present enough law and context to make it easy for a disinterested, chain-smoking solar practitioner to put his or her cocktail down long enough to notice that I've done a good job covering the issues. So, up front, I've got 3 short sentences that set the stage for the analysis. Next, we get into the education. And here, you'll see I do a very careful job in reporting the facts. I find a home for every factual detail with regard to this education, and you'll see that they fit into either the source or the action analysis. By the time we get to the conclusion, I'm really applying the law to the facts. In California, after 10 years, the community is deemed to have been adequately compensated for the money that was spent. Since more than 10 years has elapsed here, I say Wilma doesn't get any further reimbursement. She's already been reimbursed by the years that she has spent, the 10 plus years she has spent benefiting from that education. Next, we move to the joint checking account. Here, we've got to do probably our most complicated analysis in the fact pattern. And here, again, I counsel you to look carefully at what I've written. It's easy to set up this answer, but to actually write something that is literate and thorough requires a fair amount of effort. And so you'll see under source, I talk about the whole history of this account, and I follow the deposits carefully, both from his practice and from the death of his mother. That wraps up a consideration of the source of the different monies that have been commingled in this account. Next, I move to the actions. First, I talk about the account being taken as joint tenants. And here again, if you look carefully, you will see that my comparatively sophisticated law knowledge is reflected by the analysis that I do about the absence of the customary language with right of survivorship. And I spend a little bit of time trying to explain what I think that means. Next, we go on to commingling, and my conclusion is that it's probably possible to trace the relative interests and to make an allocation accordingly. I take 2 paragraphs to do that analysis, and I think it might be worth your time to pay a little bit of attention to reading how I do it, particularly if this is an area of law that you don't feel terribly at home with. So next, we move on to the 1-acre parcel. And here, again, if you're not acquainted with this body of law, you will learn something that is central to California community property law, and something that is tested over and over again, both in community property and sometimes in crossover questions. Notice that Wilma, the wife, has the right to rescind the sale. So not only does she have rights against her ex-husband, but she also has rights against someone who in almost any other context would look to be a BFP. And remember, from our consideration of remedies, when we have a bona fide purchaser who pays full value with no notice of the underlying problem, that BFP gets to walk away free and clear, and the plaintiff typically doesn't have any rights against a BFP. Well, here we see an exception to that rule, and it's a big exception, commonly tested here in California. Let's follow the analysis. We already know that the source of the funds that paid for this 1-acre parcel were community money from the joint checking account. Then we look at the actions, realizing up front that this appears to be a community asset. And we see that the husband is not a nice guy. He takes title in his own name, obviously seeking to defraud the community by so doing. That's his first act of bad behavior, and his second act of bad behavior is selling this property to Paul and lying to Paul about his own marital status in so doing. And Paul records. Then we reach the conclusion, which I deal with as quickly as possible under the circumstances. The bottom line here is the BFP, here Paul, basically gets hosed. He loses, even though he didn't do anything wrong, other than buying a parcel of real property from a bad guy. And as a result of the community property laws, which protect a spouse from being defrauded under exactly these circumstances, the sale to Paul is rescinded, if that's what Wilma desires, and she can get her money or the parcel. Interesting, particularly for those of you who are learning community property by working with me through this seminar. Okay, that leaves us with one final issue, Hank's payment of the gambling debt. And again, we ritualistically follow the formula which applies to community property problems. We examine the source, the actions, and then we apply the presumptions to reach a conclusion. Here, the source of the money that Hank used to pay his gambling debt was the sale of this parcel, which was a community asset, as I just finished discussing. Then we focus on the actions. Hank took this money and he spent it on paying a post-separation gambling debt. And the fact that this debt arose after the marriage had been not exactly formally terminated, but after the marital relationship had ended by a separation that proved to be permanent, then it seems evident that this was another act of fraud against the community and that Wilma will be entitled to reimbursement. So, as I conclude, the separate property of Hank is going to be liable to compensate the community for every penny that was spent on this gambling debt. And as you see in the first paragraph of my conclusion, I interpret the facts in a way that I think is both fair and shows critical thinking to the graders. I indicate that the husband, Hank, has acted with bad faith throughout his involvement with this 1-acre parcel. And I go consistently through the facts to indicate and make my case for just what a bad guy this husband is. And so I focus on those equities in the very last paragraph, which I present. And so, ultimately, Wilma will be protected by the California community property laws. And your score on the bar exam is going to be protected and amplified to the extent you master and understand both the black letter law, which here is a little intricate in places, and the basic approach to answering community property questions, which could not be more straightforward and understandable.